Hello, welcome. This is Seewing. Today is 23rd of May 2023, and I'm going over the Redfin report dated yesterday. But before I do that, I'd like to share with you, I'm going to go over the Mortgage News Daily with some breaking news on the mortgage rates. This is a psychological disadvantage for a lot of people, a psychological negativity around that. So the mortgage rate, 30-year fixed rate mortgage is 7.01%, up by 0.06 basis points from the previous day. We have seen elevated gradual increases in the mortgage rate in the past few weeks. This 30-year fixed rate mortgage of Seewing, technically speaking, above 7%, it will cause, in my opinion, a lot of psychological fear all over again with the volatility and negative headlines out there. Even with this, it's 30-year fixed rate mortgage, 7%, 7.01. This applied for people with very good credit, people who have FICO score of at least 720 or higher. Now, the 30-year fixed rate for VA, Veterans Administration, is a little bit lower, 6.63%. And people who are first-time home buyers, FHA program, 30-year fixed rate mortgage is also a little bit lower at 6.65%. But think about it, there's a large percentage of Americans who have less than 620 FICO score. They probably have, if you have a 720 FICO score to 680, you are in the B category, B as in Bravo of credit rating. But anytime you have over 720 FICO score, in my opinion, that's like an A minus credit scenario with respect to buying homes and getting financing. But if you have like FICO score 750 FICO score, so you are A to A plus credit rating associated with getting a mortgage loan, so you could get the best rate, which is around 7%. So still pretty high. So if you are in the B category credit rating, 680 FICO score, if the FICO score is less than 680, that would put you in the C plus to C category, and you may have to pay like 7.5% mortgage rate. And the lender, depending on what lender, they may ask you to put more down payment. If you're a primary home buyer, more down payment, like 10, 15, 20% more, that will further decrease the number of people that can qualify to buy homes. We are already at a 40-year affordability low in terms of qualification to buy homes. And with this elevated mortgage rate, and with this, the lending standard being so harsh and so strict these days, in light of the banking crisis that we have experienced in recent months, so the lending guidelines, in my opinion, and a lot of factual information are supporting this, is going to get harder and harder credit-wise to qualify to buy a home, especially with the home prices continuing to go up year to date from 2023. It's a big challenge for first-time home buyers, VA buyers, FHA buyers, and first-time home buyers. So I'm afraid more and more people will be sitting on the sidelines and will be unable to qualify to get a mortgage to buy a home to achieve their American dream. This is the reality. The wealth gap is really widening between the rich and the poor and the middle class. And unless mortgage rate comes down to lower than 6%, even 5.5%, that is where more people can qualify to buy a home. So right now, given we're moving to a historical low supply of inventory of homes and still pent-up demand, even at this elevated rates, we will continue to see upward home price pressures. Having said that, let me segue and go over the other areas that we talk about this article by Redfin. So now, again, I caution you to not to get focused and paralyzed by the negative headlines. If you dive deeper into the article, which I will show you, this headline is not as bad as it is, because the headline really says, the Redfin headline dated today, 22 May, homes in Austin and Boise are selling for $80,000 less than a year ago. But then again, real estate is hyper-local. There are more than 2,000 counties in the U.S. Every local market is different. So wherever you live in your local market, you need to focus and understand what your market, and instead of just being overwhelmed by the national headlines that you are seeing, including my article I'm trying to present. With that said, pandemic boom towns and pricey coastal markets are seeing historic home price declines. Again, a little bit of a doom and gloom scenario. I wouldn't say historic. Okay, home price declines. We see declines of 10% year over year. I would not say historic. If there's a decline of about 40 to 50% housing price drops, reductions, that would be a historic. All this negative doom and gloom, the world coming to an end scenario is just not that bad. Again, nationwide, and I'll prove it to you when I would go over this article. Nationwide, the median home sale price dropped nearly 18,000. Look at this, 18,000. What if the median price of a home nationwide is 400,000? Just do the math. 18,000 reduction from median home price of 400,000. We're talking less than 10% drop. We're talking like what? 3 to 4% drop? That's nothing. We're going through a very minor correction. This is not a housing crash by any means, regardless of what the crash bros YouTube videos are, bombarding the YouTube channels out there. So do not fall under the clickbait scenarios that are used by many YouTubers out there. Let me go dive deeper so I can validate what I'm trying to tell you. This sentence right here, home prices posted biggest drop since 2012. You have to understand, prior to 2022, there were no housing home prices. Home prices nationwide for the past 10 years since 2012 has been consistently growing, consistently appreciating because it has been a robust market. So up until we have not seen any home price drops until the second and third quarter of last year, 2022. And that applies to a lot of those cyclical markets, especially in the western region of the U.S., which I will go over. But the majority of the housing markets, even throughout last year, throughout the skyrocketing home mortgage rates from 3% to 7% throughout last year, the areas of Midwest, a large portion, which a huge percentage of the U.S. geography, the Midwest, and the large portion of the South and Southeast have not seen any home prices drops. They have seen home prices increase year over year, but because our investors that have purchased last year, even at the 7% interest rate last year, the second half last year, 2022, in Central Texas and in several Midwest markets that are investors are buying cash in properties, and in Florida and in various areas of the South and Southeast, their home prices have increased year over year. So real estate is very local. It's local to a point where it's all about specific neighborhood, specific street, specific house. If you know how to pick a house in a neighborhood in a particular market, that market have its own very unique housing and economic statistics. Right? So with that said, I just want to bring this point out to you. Although I'm sharing with you the national headline, it is really not all that bad. In fact, look at this line, this graph kind of show you the housing price drops since the middle of last year, summer of 2022 until now. We see this steep vertical decrease, but we're talking only a minus 4.1% drop nationwide. As you can see, since 2012, we have seen consistent increases in home prices. And then during the pandemic boom, 3% mortgage rate, we have seen a massive amount of bidding war back in 2021 and the first half of 2022. So now it's a challenging market to say the least. Right. And also, if you come down here, new listings fell to second lowest level on record in April of 2023. Look at this new listing. I know they don't have the data showing here. Over here, March 2023, new listings nationwide is at a little bit less than 450,000 listings. As you can see, ever since around the December 2021, a year and a half ago, we have seen continued decreases of new listings. Sellers are not putting their homes on sale in sufficient numbers. because they have locked in at a historical low interest rate. So that's what's going on. And we continue to have this decreasing trends of new listings. Therefore, we could have a historic low supply of inventory, therefore causing a upward pressure on home price increases like we have seen right now, because we have seen some sort of mini bidding war and multiple offer situation throughout the country, especially the lower entry level, lower to medium home prices in each respective markets. As you can see, back in around 11 years ago, the new listings were at the mid 550K area. And throughout the past decade, new listings has increased on a consistent basis. Then, of course, in the pandemic, the new listings has decreased because of a pent-up demand as a result of the mortgage rate. So the pandemic boom has occurred around here, quite a range. Now, ever since early last year, the new listings has dramatically decreased. And then there will still have some pent-up demand. So the trends are looking very disturbing and troubling. Now, new listings go hand in hand with the pending home sales. The recent mentioned pending home sales fell 21% year over year in April. 21%. As you can see, again, pending listings have been falling month over month ever since we're talking right around here. Ever since about December 2021, January, February 2022, we're talking like almost like 18, 19 months of consistent pending home sales decreases. So very fewer and fewer homes are available on the open market. And then let's look at the April highlights, comparing current month, April 2023 versus last month, March 2023. What has been the changes? And more importantly, go over year, April 2023 to from April 22. Now, bear that in mind. In April 2022, we are still having a very pandemic boom market because the mortgage rate at that time is around 5.3%. So around 5.3% mortgage rate in April of 2022, we're still seeing historical numbers, meaning we're still seeing massive multiple offers, 20, 30, 40 offers per house, massive bidding wars, and the rates are still pretty historical, not 3% like we saw in 2021, but 5.3% in April 2022 is a very elevated, very fast-moving seller's market. So very hard to compare April 2023, which is right now at 7% interest rate, versus April 2022 at 5.3% interest rate. We're talking like 1.6% increase in mortgage rate. That's why we're seeing the situation we're seeing right now. So I'm about to share with you year over year data, but again, don't dwell on the fact that it's not an apple to apple comparison, because April of 2022 is still a very robust market due to the very low mortgage rate. And wait until June and July and forward for the second half of this year, when I report these articles to you, there'll be more of an apple-to-apple comparison, because the mortgage rate has drastically increased in the second half of last year to around 6 to 7%, in alignment with the current mortgage rate of 6 to 7%. So when I compare year-over-year data in the next few months and beyond, and I'll go over the reference whatever articles I'm trying to present, you will see a more apple-to-apple comparison. Does that make sense? Just want to make that clear. So having said that, the median price right now is 408, which is higher than the beginning of the year. So we're seeing 8% appreciation of homes month to date 2023, although year over year is minus 4.1%. Pending home sales compare April this year from last year, again, minus 20, which is understandable, 20% less for a pending home sale this year from last April. Home sales sold, same thing, minus 22% less this year than last year. New listings, minus 26% from last year with new listings. And months of supply, this is shocking, right? Last year, April 2022, the month of supply is less than 1 month. We're talking 0.7%. This is pre-historic crustaceous historic low supply of inventory back in the caveman days. Okay, I'm showing a little bit of exaggeration, but a balanced market, by the way, a balanced market where equal supply of homes versus demand is around 5 to 6 months is a healthy housing market, not a seller's market, not a buyer's market. 5 to 6 months of inventory. And we are seeing, look at this, we are seeing a supply of inventory at what? Let me see right here. That supply of inventory, like I lost my, oh, right here, month of inventory. And we're seeing right now, April 2023, 2 months supply of inventory. We're heading back to a historical low supply of inventory due to consistent decreases in new listings, active listings, pending sales. All these trends, it just has its consequences. So 2.1% of supply of inventory is extremely historical low. There are very few homes out there to buy, even though the demand are still pretty good out there. So we are seeing gradual home prices increases as a result of the historical low level of inventory. Does that make sense? All right, so let's continue for the last few minutes. Medium days to take the sales, 36 days this April, which is even below the pre-pandemic level. The pre-pandemic level is probably 45, 50 days, medium days on market. But you can't, last year, April 2022, 18 days, home flags off the market. Again, last April is not the apple to apple comparison opposed to this month. But I have to report this information because it's resident information, giving you the data. So I have no choice but to show my obligation and responsibility to report year-over-year changes from 2023 April from 2022 April. All right. And again, average sales price ratio, 0.05% of homes at a little bit below asking, which is fairly normal. Share half of the homes that were sold this April. We have a buyer within 2 weeks. They were under contract. Again, the average fixed rate right now is very high at 7%. So that's going to scare a lot of people off. But at the same time, you can still see a lot of motivated buyers out there that have the income, that have the down payment, that have the FICO score. So still, the demand will subside as a result of this a little bit higher mortgage rate we have seen today, this week, 7%. So, but then again, with still more motivated and qualified buyers out there than there are available supply of homes to sell. That is the bottom line. That is what's going on. All right. And let me go through a few more data points. The lack of home sales is forcing buyers to move fast and compete. Yes, we expect either 7% interest rate. Okay, I kid you not, there will continue to be bidding wars and multiple offers, especially homes that are very clean or turnkey and good location, and they are priced right, given the realistic market conditions out there. All right. Or let's go over a certain segment of the U.S. Again, there's no such thing as a national listed market. Every market is very different. And with that in mind, the reference says the Texas housing market is holding up relatively well. They have more than sufficient homes to sell. The pending sales just fell very low level in Dallas metro area, which is less than 2%. Florida, Southwest Florida, the pending home sales only down by 5% from year over year. And a lot of these Texas markets still have fair amount of inventory. So their pending home sales are relatively normal at 10 to 11% thereabout, whereas in other markets, I'm going to surprise you with something as we go down this article. But yeah, so Texas is still have a good inventory level and they are selling very well. The decreases of new listings are not as dramatic as in other part of the country, especially the western region of the U.S. So listings in Texas are holding up very well, partly because builders in this state has been very active. There are a lot of available new construction inventory. And so that's a good thing. So buyers have a lot of options in Texas and few other states. Let me see, medium sales prices, as you can see, it's all about, look at from 2013, the past 10 years, we have seen home prices continue to go up, because when you have a long-term perspective, prices normally will go up. There's some slight dip, like we have seen the second half of 2022. There's a slight dip. Now the trend month over month this year, 2023, we are seeing upward trend. Go figure, right? So anybody talk about housing crash? If you listen to house crash bros out there, you are being gullible. Okay, for don't fall into this narrative, this doom and gloom, the world coming to an end. It's not coming to an end. The real estate market is still very resilient and still very robust, and especially when the mortgage rate comes down, hopefully later this year. But right now, people need to hang in there. All right, so I went over the pending sales. In fact, you can see the pending sales. This is over here. I'm not going to go over it in too much detail. Some areas pending sales fell over 70%, which is pretty shocking, especially Boise, Idaho. In Honolulu, pending sales were down 73%. Closed sales, there are very few closed sales in the western region, especially in California. As you can see, there are sales declining massively in California. So we're seeing people no longer putting their homes. I live in the San Francisco Bay Area for the past 30 years. I see what's going on in my neck of the woods. So the Bay Area, and especially we're seeing very few closing transactions recently, because home buyers or home sellers are locked in. They're not going to give up their 3% mortgage to move up to buy a $2 million home with a 7% mortgage loan, essentially doubling their payment from $6,000 per month to $12,000 per month, whatever, some ridiculous home mortgage payment they have to pay. Anyway, then median prices fell. And it's the same old story. In the western regions, prices have gone up so much the past couple of years, and they are coming down. They have came down to the tune of 15% in Boston, 50% in Boise, San Francisco, 13%. But the home area, the markets that are in the Florida markets is actually very robust. Home prices continue to increase due to massive demand and migration and population gains in these Florida markets. So the entire state of Florida, for that matter, has been very resilient. So again, supply of active listings are very low in certain markets. You can see it for yourself. I'm not going to go into too much of that. And the competition everywhere, because again, the sellers are locked in. They got to start a low mortgage rate. They're not selling, and there are still buyers out there, or the home buyers out there, they have cash. So they totally ignore the mortgages. Go figure, right? You still have a fair number of buyers out there that have all cash to buy $500,000 homes, $1 million homes, $1.5 million homes. Even in California, there are still cash buyers in many areas of the country. So that's what's happening. Not everybody's poor. People still want to buy houses. There's an extreme shortage and what have you. When you talk about the competition, I'm not gonna go over. You can pause the screen when you watch my videos at your leisure. Take your time. At the end of the day, the reason why this graph shows competition is because there are lack of supply. This is Seewing news, right? And pent-up demand are still pretty strong, even at 7% mortgage rate. I will conclude with the bidding war right here eased up in April because of the higher mortgage rate, but still half of the homes are still facing stiff competition. And we are still a seller's market, and we're seeing some home prices being bid up depending on what neighborhood, what markets, but overall we're seeing still extremely low supply and high demand. So let me scroll down here as I conclude this home purchase fell through April because of today's 7% mortgage rate with a lagging indicator. Look, for the next few weeks, because of the 7% mortgage rate, even for the next month, heading into the latter part of May and the beginning of June, because of today's mortgage rate with 7%, I anticipate there will be fewer mortgage applications. NBA Mortgage Bankers Association on the website. I'm going to look at that in the next few weeks. We can see decreasing amount of mortgage applications because even fewer people will be able to afford to buy a house these days. because of the rising home prices. Yes, 6 to 7% appreciation of homes nationwide throughout this year, throughout the first 4.5 months of this year, 2023, because of rising home prices. The median home prices have increased beyond 400K, and then the mortgage rate has risen to 7% right now, which is very concerning to a lot of people. That will, the home affordability factor will decrease. We're going to have a lot less demand than it is right now. So there's going to be a lot of people going to be on the sideline. So that's what we're seeing. So do I see a home price crash? No. It's all about economics 101. If the supply of inventory is lower than demand, we will not see price decreases, even though you may see some slight price decreases in the volatile western region of the U.S., such as California, and maybe a little bit of Boise and Austin. But I do not see double-digit home price decreases, again, because of economics 101. If demand exceeds supply, it will put upward pressure on home prices. Yeah, so we remain to be seen. So my takeaway for this video is this article with the rich man is just 7%. It's a psychological barrier. I mean, just like when a few months ago in February, when the mortgage rate fell to just 5.99%, remember a few months ago? That's just, when people seeing 6% below all the way to 5.99% rate 2 months ago, and that created a lot of energy, a lot of positive feelings during that time. But the 5.99% was short-lived. Then a few days later, it went back up to 6% and above. So the past 2 months, mortgage rate were meddling in the mid sixes. Then the past few weeks, then the mortgage rate was increasing to 6.5, 6.7, 6.8, 6.9. Now today, according to Mortgage News Daily, is slightly over 7%. So this is very, very disappointing for a lot of buyers that this is supposed to be a very strong spring housing market on a historical basis. We usually see on a historical basis during the spring of every year, you usually see new listings up, pending sales up, inventory up, all those kind of things. On this year, this spring 2023, historically speaking, we have not seen any of these trends. In fact, the trends are completely in reverse. So this is a very abnormal market, a very volatile market. For those people that have the wherewithal to buy, because you have a long-term buy and hold, you qualify, you have a good reserve, you have a good job and all that stuff, who's to say you should not buy as a primary home buyer? For real estate investors, the things that I do, I help you for the past 1 year. My business model, if you can buy a low entry-level home, making cash flow at 25%, even at 7.5 mortgage rate, and you should buy, because you can still achieve cash flow if you buy in the right market, in the Midwest market, which we are promoting to our investors, and in the South and Southeast market. We buy entry-level homes that are less than 300K that have a good rent to value ratio and good growing or fast-growing market in the South and Southeast, in particular for Florida and Texas. There are still some opportunities to buy cash flow properties at 25% down payment. So just buy for the long term and rely on the rental income to achieve your long-term goals. So with that said, as I conclude this message, if you see a lot of value from this presentation, please smash the like button, subscribe to my YouTube channel if you have not already. I need more subscribers, so I could reach out to more people to hear my credible, realistic information, not clickbait. I couldn't do a clickbait headline, if I like to think on it. I just give you some real raw data to give you good information to make an informed decision to buy or sell or to invest, whatever the case may be. All right. So with that in mind, other than subscribe to my YouTube channel and tell people about me, please subscribe to the channel. Please quickly visit my website below, and also comment on where you're hearing this video from, what area of the country, what's going on with your local market. Share with me, ask me some questions. I'll be more than happy to answer your comments. And also drop your email into my form on my website below, so you can subscribe to our weekly turnkey real estate investor newsletters. When you join our free network, you will receive free weekly housing investment updates on a lot of different areas. And so we help investors to buy out-of-state turnkey properties off market. This is our specialty. We connect our members with real estate agents and experts in the hottest markets in the U.S. and country, regardless of where you live. So you can buy remotely and passively and scale your portfolio and buy cash flow properties in the most robust market in the country. So achieve your long-term wealth. All right. With that said, for further ado, thank you so much for listening to the Seewing. I will see you on the next video very shortly. Have a nice day. Bye bye.